Hello, everybody. Welcome to Tuesday. The S&P 500 was up 0.00% today, so very flat. We've actually had that happen, I think, another couple times in the last 12 months. I've been doing these since 2020. I hadn't seen any before then. I wear different colored shirts based on where the market goes that day. I don't have one for zero, so I guess I'm going to have to get one if we keep having these days. So there was actually a fair amount that was going on today altogether. We had some volatility before we kind of settled in there. Really seems like the tariff situation with China has, solidified some, at least from the market standpoint. We have seen some sell-off and some of the things that ran up. Matter of fact, today, a lot of the stuff that has run up really high, whether it's artificial intelligence or precious metals or those types of things, all went backwards. Is it the top or is it just a pullback? Because pullbacks are healthy. I mean, you need these things and you need this consolidation period where you can kind of go sideways. And I tell you, the dip buyers aren't done yet. In my opinion, they're still going to come in here and buy these dips. And don't be surprised to see the precious metal, for example, which got hit pretty hard today, come jumping up just because a bunch of people start pouring in as far as that goes. So we'll see if that's still out there. I don't see anything in the catalyst at the moment, that's going to create some type of continuation of the downturn in those particular areas. We are in the middle of earnings season, so it depends on, what companies say what as to, what does happen here. Can get a little volatile in these timeframes, but for the most part, earnings season has been quite positive. Although Netflix did come out today with a disappointment on the revenue side, and their stock got hit, was kind of getting hit before that too. So, but that's an individual company situation, and it's just something that continues to happen across the board. When you look at the broad market and the earnings report so far, they've been quite good. Over 85% of S&P 500 companies, as I mentioned yesterday, are doing better than their expectations on their profits, which is a nice thing to see. So we're heading into a better part of the year. October can be kind of volatile. We can definitely have some other things that happen here, but you get into November and December, especially December. These are some of the best months of the year historically on a seasonal basis. However, September is supposed to be one of the worst months, turned out to be really good. So when you're lowering rates, oftentimes that will offset whatever seasonality you might have. And of course, they're talking about lowering rates again here and next week when they meet. The beta is 96.7% chance that we're going to lower rates. So probably pretty likely. Chairman Powell even insinuated that it seemed likely that we would have at least one more rate cut here, which is coming up. And then there's no meeting in November. And of course, we'll see what they do in December as far as that goes. The expectation is for another rate cut in December right at the moment. So these are things that are going to drive the market. You still have the AI spend going. You have these rate cuts. It takes something pretty big to stop those types of momentums, like the situation with China, although mostly China seems to be more negotiation than actually a really big, blow up as far as that goes, at least so far. We'll see what happens. So that was what's happened today. Good day to, kind of be paying attention. I think it was an interesting day to see this rotation and see where it goes from there. It'd be very interesting to see what happens tomorrow. So we'll talk to you then. Thank you very much.